for those looking for yield right now, what areas of credit do you see where spreads can still tighten further?
So let's start from a global perspective. I still think there's value in U.S. investment grade and high yield. There obviously, you've seen a meaningful amount of retracement from the March sell-off. But given the Fed's positioning, I think there is still value in that space. From a global perspective, European credit, I think, is still very well placed given the ECB backstop or the ECB support. And then Asia actually is in a sweet spot where a combination of the quality and yield with lower risk of the fallen angels, lower risk of, I would argue, in fact, the default rates relative to global or the rest of emerging markets, and a reasonable spread pickup that we are seeing in Asia relative to U.S. or Europe. So I think you would see, not in a straight line, but potentially a continuation of some spread compression in Asia in the next 6 to 12 months.
Neeraj, I know China is one of the markets you look at as well for opportunities. Given just what we've seen in just the sell-off in government debt recently, that's taken a little bit of a pause in the last couple of days. But does that push you to focus a little bit more on the offshore market? What are you seeing in terms of opportunities in China?
So I'm positive on both onshore and offshore markets. Now, offshore obviously has been one of our strong conviction calls for last, in fact, 18, 24 months now. We still remain comfortable with overall positioning we have in China across the strong SOEs, the investment-grade credit, and within the high-yield space, the Chinese real estate high-yield. So we still like that in the offshore market. Onshore is actually getting more interesting with obviously the backup in the rates market that we have seen. We still like the onshore rates market here on the back of improving technicals and the valuation. And we do see a lot of dispersion picking up in the onshore credit markets, which in fact is a lot less of a focus for global investors today and has very low foreign participation. So I do think onshore markets, given the size and the breadth of the market, do provide ample opportunities for investors.
Neeraj, you've talked about valuation and dislocation-driven opportunities in India. Walk us through what that means and where you're looking in that market.
So India, overall, we are positive, although with a cautious lens here. I would say there's obviously the risk of a rating downgrade growing up. I don't think that's not our base case of a rating downgrade to junk in 2020, but obviously the path of fiscal and the debt levels will define some of the risk there. In terms of the value, we do like investment-grade credit in India. We do like the renewable space and the high-yield credits. And we've been very selective in the rest of the high-yield market in India for the very point around the weaker backdrop. But from a technical perspective, it's worth highlighting India is a very small part of the index. It's little over 6% of Asian credit index, and the supply is not very heavy. So the technical backdrop remains positive there.